Hello everybody. I want to teach you guys how to get business financing even if you have bad credit. Having financing for your business is very important. And what I'm going to go over in this video is, one, how to get the financing, what the qualifications are, what and how you should be using the funds, and how to actually grow your business from, hey, I'm just able to get financing, to now I can hop in and get a line of credit, get an SBA loan, get equipment financing. I'm going to teach you guys how to grow your business as long as you follow these steps. All right, so we need to talk about what the credit ranges can be and look like, and then we'll work on the program, how to fix it, and what the steps are. So, ideal credit for a business owner, right? They look at your business credit and they look at your personal credit. The personal credit is what we're going to talk about right now today. Okay, so when they're looking at your personal credit, if you're over 680, you can qualify for any type of lending program. Over 720 is even better. So I'm talking about, and then over 650, you should qualify for a line of credit. Under 650 is what we're going to be discussing here. So when you have a credit score from 500, maybe a little bit lower than 500 to 650, that's who this video is for, right? People that want to grow their business, they've probably sacrificed a lot to, because I've seen it. I've seen tons of clients sacrifice their personal credit to build a business, right? A lot of times people will put a lot of the expenses on personal credit cards, and then they have high debt to income ratios, which bring down their credit. Don't do that. There's other options. Don't use your personal credit to build your business through credit cards and other avenues, okay? Because what will happen is, if you need to get a house, if you need to get a car, all right, anything that you personally need, it's going to be much harder to get down the line, all right? So let's talk about the program. The program is going to be a working capital advance, all right? And the main qualifications are 6 months in business and 500 credit or below, and you have to be doing $15,000 a month or more going into a business bank account with decent cash flows. When I say decent cash flows, I mean that you're not negative more than, call it, 3 days a month or 5 days a month. You need to be no more than, call it, averaging 5 negative days a month, unless you're processing a lot of credit cards, and even then it can be a little challenging, and I'll get into that in a little bit down the line, okay? Now, if you're in this situation and you get approved, what should you do with the funds? The funds should be used to grow your business. It should be either for marketing, inventory, adding staff. It should be a short-term capital expenditure that when you use those funds, your business is going to grow. You're going to grow 10, 20, 30% over the next few months. All right, so you want to grow your business, and you also want to start building your credit. So if you take a working capital advance, what you should be doing is looking for the best way to grow your business with the funds, and you should automatically start cleaning up your credit. We have all of our clients go into a credit repair program. Why? So we can get them cheaper funds and better programs in the future. All right, because when you have a better credit score, it's going to be easier to get into, let's say, a line of credit or an SBA loan. All right, what are great ways to grow your business? Spending money on marketing, adding employees, adding inventory or lines, okay? Anything like that that is going to help bring people into your business or give you more inventory to sell is what you should be doing, because we want to see your sales grow, all right? That is the key to utilizing a working capital advance. Now, let's talk about the qualifications. It's really up to the cash flow, the credit, the time in business. Those are the things that they're going to be looking at. Underwriters will be looking at to either approve you or deny you. So when you're looking at that program, you should know what your credit score is. You want to see how your average daily balances look. If they don't look great, but you accept credit cards as a form of payment, make sure you send those in as well, because that will help you, all right? And then time in business. The longer you've been in business, the better off you're going to score. Why? Because most businesses fail within the first 3 years. So if you've made it past that part, you're considered less risky when underwriters look at your application. All right, I'm just giving you guys some inside tips here, so when you do apply, you already know how the process is going to work and how your application is going to stack up against other people's application. All right, this is very important, so please write these down. All right, now the process. The good thing about a working capital advance is you usually can get it in 1 or 2 business days. All right, all you need is an application, 6 months banks. If you're seasonal, meaning you do better in the summer or the spring and not as well in the fall and the winter, send in 12 months of business bank statements, okay, every page. On top of that, you want to send in your credit card processing statements or your merchant service statements. You want the last 4 months of those. You want a driver's license, a voided check, and your most recent business tax return. All right. From there, that's 95% of what you're going to need. And someone should be able to get back to you within, call it, a business day, 1 or 2 business days, with what the program's going to look like. Now, how are these programs structured? They're usually anywhere from 5 to 12 months, I would say, is the average. We have them that range from 3 months all the way out to 18 months. All right, now the payments, how do the payments work? The payments work as either small daily micro payments, so a Monday through Friday payment, no weekends or no holidays. There could be a weekly payment, there's bi-weekly payments, and then there's payments that come directly out of the credit card sales. All right, and typically this is one of the more expensive programs. There's no two ways about it. So if you are going to utilize it, make sure that the money that you're borrowing, you're going to make 4, 5, 6 times, or the money that's being advanced to you, you're going to make back the cost of that capital, 2, 3, 4 times over, right? Because you're using it to grow your business, and then you're going to fix your credit. That's important. And the other thing is, they do offer prepayment incentives. I can't tell you how many people come to us that went somewhere else first, and they weren't given a prepayment incentive. All that means is if you pay early, you'll save some money off the total payback, right? Because all an advance is they're advancing you against your future sales, okay? And they're getting a discount, that's their profit. So once this is structured and you use it and the business is growing and you're growing, not only your sales, but you're increasing your credit score, once you're about 50 or 60% of the way through, that's when it's time to look for a line of credit, all right? So it's very important to understand you should not build a business by taking multiple cash advances. Cash advances and working capital advances, they are used for short-term needs to increase your business, to increase the sales. In that same time period, you should be working on increasing your credit score and getting ready to get into a much better program down the line. What are the advantages of them? They're a lot quicker. They're a lot easier to qualify for, okay? And there's a lot of flexibility, whereas if you get an SBA loan or a line of credit, there's not as much flexibility, which is why a lot of clients like them, all right? Where people get in trouble with them, though, is that they take 3, 4, or 5 of them at a time, and that's something that will cripple your cash flow. All right, so I want to teach you how to understand if the program's going to work for your business, right? What you need to do is think about what the increase in sales are going to be. So, for example, if you borrow $50,000 or you accept an advance for $50,000 and you're putting that into marketing over the next 3 months to build out a marketing campaign for your business. And right now, currently, the business is doing $100,000 a month, right? And you expect a 15% increase. That means that you should expect an additional $15,000 in revenue every single month, okay? And if, let's just say you got the $50,000 over a year to pay, and the total payback is, let's just say it's $65,000. Okay, you want to make sure whatever that daily payment is, okay, you are making more money with the marketing campaign than you are paying the advance back. All right, and then that's just from a cash flow perspective. From a return on investment perspective, you want to make sure that that marketing campaign for each month, if you're bringing in $15,000 a month, let's just say you do that for 12 months, okay, and the program, the advance is 12 months. Well, if you made an extra $15,000 each and every month, okay, that should equate to an extra $180,000. As long as that $180,000 is more than what the cost of the capital is, and hopefully it's 4 or 5 times more, and in this example it is, that's a program that would work for your business. Right? That's how you analyze these things. And that's how you can avoid taking a program, taking an advance that's going to get your business into trouble. Because it really is used to grow your business, and it's quicker and it's easier than getting, let's just say, an SBA loan. Lines of credit, if you qualify for them, they are just as quick and easy as a working capital advance. I hope this helped you, and if you have any questions, please feel free to email me directly.